Thanks for clicking. We had another big week in China's real estate crisis this week, as all eyes were on whether or not Sunac, China's fourth largest real estate developer, would default on its debt.
Investors watching this name very, very closely to see whether we do get this first possible default from Sunac. And as you mentioned, it's the fourth largest by sales.
We also received reports that China's zero COVID policy and the lockdown stemming therefrom may be having a major adverse effect on its economic development. Finally, we received the Federal Reserve's Financial Stability Report, which lists China's real estate market as one of the near-term risks to the United States financial sector. So what I want to do today is skip over Evergrande again.
Good.
Go over Sunac's default, discuss the COVID lockdowns in China and how those lockdowns are affecting its economy, and then I want to discuss the Financial Stability Report by the Federal Reserve, showing that China's growing real estate problems are a near-term risk to the United States and to Canada.
Mind your business.
With China's lockdowns weighing on its economy, and as we'll see, with its real estate sector showing no signs of rebounding, the situation in China is continuing to worsen. And as we'll see with the Federal Reserve report, as this situation gets worse in China, we will be impacted here in the West, here in the United States, and in Canada. We'll have updates out on this situation every Friday on this channel. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into Sunac's default. All eyes were on Sunac this week, as China's fourth largest real estate developer was set to default on its debt following a 30-day grace period. By late Wednesday, it was reported that Sunac had failed to make its payment and had officially defaulted on its debt. Well, this might seem like just another default in a long string of defaults of China's real estate developers. It does point to a growing problem of liquidity in China's real estate market. It could very well trigger numerous cross defaults across the sector. It is definitely a sign that despite China's numerous attempts to revive its real estate sector, problems continue to abound.
We really are moving into this sort of second phase of a crisis where many of these much larger developers are now coming under enormous financial stress.
And these problems might very well be bleeding into the economy as a result of China's continued and sustained zero COVID policy. Reports started coming in this week of China's zero COVID policy having massively negative effects on China's economy, affecting over 160 million people with a total economic output of $2.7 trillion. Zhu Jingguo, sorry if I butchered that, of Peking University this week argued that the negative economic effects of these lockdowns have been 10 times worse than the original Wuhan lockdowns of 2020. And the data out there is definitely supporting this. China's services sector plunged to its worst level since the beginning of 2020, as lockdowns in Shanghai have confined millions of would-be workers to their homes, unable to produce, unable to work.
First time?
And new surveys coming out are also showing that businesses in China are starting to feel the heat, showing the most negative sentiment in China among business leaders since February of 2020. So clearly the COVID lockdowns in China are having a negative effect on its citizens and on its economy, with millions affected, services slowing, and real estate plummeting. However, if you're thinking that perhaps these lockdowns are not worth the economic toll being taken, President Xi released a statement saying that it's best to keep it to yourself.
A strongly worded statement Thursday night essentially saying the nation, calling on the nation to fight against any speech that distorts, questions, or rejects our COVID control policies.
So yeah, big problems in China's real estate sector and its economy as a result of these lockdowns. And the Federal Reserve has released a report saying that this real estate crisis in China, not caused by the lockdowns, but nonetheless, this real estate crisis in China presents a near-term threat to the U.S. financial sector. The report argues that Chinese banks are particularly vulnerable right now, as more than half of their Tier 1 capital is tied up in real estate, is tied up in wealth management projects, and due to local government debt, which we've discussed at length on this channel, having constituted such a large portion of Chinese GDP, with the Federal Reserve saying 70%. The Fed report argues that should Chinese banks come under increased strain, this would have a negative effect on bank lending and GDP growth in China, which would obviously affect us here in the West, in the United States, and in Canada. As lenders and banks in China refuse to lend as they hold back the money this negative sentiment could spread to the West, to the US, to Canada, to the rest of the world. So as banks, as lenders get worried that their money is no longer safe in China, this could very well spread to the rest of the world, and we could start to see a credit crunch here as well. And that's not even to mention the inflationary pressures being caused by the lockdowns in China, which will no doubt be felt here in the West, in Canada, and the US as well. So, between the real estate sector plunging in China with more and more defaults and no end in sight, and the services sector in China suffering due to the lockdowns, massive economic fallout, things are definitely not looking great in China. And as we've said before, what happens in China will hit us here in the West, whether it's, as the Federal Reserve says, through decreased lending, lack of access to capital, or through inflation, as an increase in the cost of goods in China will lead to an increase in the cost of goods here in Canada and in the United States. We'll obviously have updates out on China's economy and how this whole crisis unfolds on this channel every Friday. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.